is the word. On the verge of default, the country is rejecting an 11th hour debt deal as a massive payment comes due today. Former National Economic Council Director Larry Lindsey is here to share his thoughts on the global economy, the Fed, and more.
Greece isn't the only one with a crisis. Puerto Rico facing major deficit hurdles as well, while the governor there is seeking Chapter 9 bankruptcy for its massive $72 billion debt. A live report straight ahead.
And millions of Americans could be getting more for overtime pay. A new proposal set to be announced by the president. The CEO of Paychex talks about how it could affect small business. The final hour of Squawk Box begins right now.
Live from the most powerful city in the world, New York, this is Squawk Box.
Welcome back to Squawk Box right here on CNBC First in Business Worldwide. I'm Andrew Sorkin along with Becky Quick and Joe Kernan. We are now less than 90 minutes away from the opening bell on Wall Street. Take a look at the futures right now. We have green arrows. Dow looks like it would open up about 121 points higher. S&P 500 up about 16 points, and the NASDAQ up about 31 points. And check out markets in Europe right now as well. Things have turned around. Things are actually looking up for the most part across the board, in large part because there's now new speculation that something is going to happen in Greece.
Up, down, up, down. And remember, we came off our highs. Now we're almost back to our highs.
But it's all...
Europe went negative, negative, now positive again. This is the fourth.
But all on some kind of view, and we're going to get to Michelle Caruso-Cabrera in Athens in just a moment, that somehow a deal or something is going to be reached ahead of this referendum such that Alexis Tsipras or somebody can actually recommend to the people in Athens and Greece that they vote in favor of this.
There's been a lot of people that always thought that when push comes to shove,
a deal would get done.
Right, referendum or not.
Well, the referendum changes the dynamic, though, because you actually have a real vote.
Does it really? I mean, there's time. Deadlines are fake.
They can't. Anyway. I mean, we'll see. Maybe they can sign a deal without a referendum.
But we've known.
But at this point now, it's on the table.
They've been broke for how long? 4 or 5 years.
Longer.
Been totally insolvent, probably longer. So, I mean, I guess that next month, and I don't know which date, but there's the big payment to the ECB is next month. Right. That's what they got to do. The day doesn't matter. Do you know which date?
Why don't we try to get to Athens if we can, because Greece, of course, the main story that is weighing on the markets. And we should tell you that among the latest headlines coming out of Europe this morning, German Chancellor Merkel saying the door stands open for talks with Greece, but adds the bailout program expires at midnight. She notes she's not aware of anything that changes that. And Chief International Correspondent Michelle Caruso-Cabrera joins us from Athens. She has more of what's going on the ground right there. Michelle, good morning.
So, Andrew, we have confirmation now from the European Commission, the spokesperson coming out and saying the following, that the president of the European Commission had a phone conversation with the Greek prime minister last night about a last-ditch offer here, which would be extremely similar to what was on the table Friday night, the proposal that was rejected by the prime minister. However, also included in this would be a commitment to revisit debt sustainability. What does that mean? Greece has a lot of debt, as we all know. What this government has long wanted is a write-down of the debt, a real restructuring of it. What the Europeans have said in the past is, we're not going to write down your debt, but we will, once again, as we have in the past, if you fulfill your commitments, we will extend maturities and lower interest rates. So we may see inclusion of some kind of language related to debt sustainability. Theoretically, that gives the prime minister a win, gives him an off-ramp, to use the vernacular of our current State Department, our White House, in this situation. Also, though, would be a requirement for the prime minister to now campaign for a yes vote for the Sunday referendum that he has called. Up until now, and even last night, he was campaigning for a no vote and a rejection of the Friday deal. So that is the latest that we have. We are waiting to see if this is real, if the prime minister will really do it, and then if the rest of the finance ministers will go along with it. So a lot of ifs, but that is what's moving the markets this morning. Another thing we want to tell you about, a member of parliament this morning, Harry Theo Harris, has caused quite a stir. He tweeted out and then also said in parliament, and we have spoken with him on the phone as well, saying he knows for a fact and knows of plans by the current government to transition from the euro to the drachma. They have a transition plan in place that they are working on. He said to me over the phone, in his opinion, that's what this government would prefer. But that bottom line, he says, it would be irresponsible for them at this point not to be planning some kind of transition. So once again, Harry Theo Harris, who's been a frequent guest on CNBC, he used to be the tax collector in Greece, confirming that he said in Parliament and on Twitter that he thinks, that he knows for...
Oops.
All right, it looks like we are having some trouble with that shot, obviously.
This Schabel guy, did you see this latest stuff?
From the German finance minister?
He says, see, the big argument is one side says a no vote means you're out of the euro.
Right.
The Greeks said it doesn't mean that at all. It just means that it's a no against this plan, and you can't kick us out. And then Merkel was sort of wishy-washy on whether it meant some of them said you're out, you're done if you do this. Now, Schabel was saying that Greece could stay in the euro even if there was a no vote. And he says that they also might be able to tap EU support fund and that the EC would backstop the euro as well. So we don't even know whether the referendum means you're out. Whether
but then what does that even mean?
That doesn't mean you get thrown out immediately of the euro.
But if you continue to not pay the debts as they come due,
that's next week, though.
That's bigger and bigger issues.
There's an ECB payment.
I also think that there's a perverse incentive. This goes to a moral hazard issue. If you start trying to come up with all sorts of wackadoo plans to let them either stay or make it easy, it just encourages Spain and Italy and Portugal and everybody else.
That's why we're in this
bad
position.
behavior.
Yes.
That's why we're in this position right now. It's because the ECB had to stay tough. But I think there's still a way. I don't know if I were in Spain or Italy or Portugal, I'd be pretty afraid at this. I wouldn't think you could.
Concerned too.
Yeah, because the ECB is much tougher than they were in the past.
That's right. Let's bring in another voice on this right now. Larry Lindsey is the president and CEO of the Lindsey Group. Of course, our guest host for the morning is Tom Fanning. He is the chairman and CEO of Southern Company. And Tom, thanks so much for being here.
Great being with you guys.
It's great to see you. Let's start very quickly with Larry. To me, this has been a very odd situation, watching and trying to figure out who has the better hand at this really bad poker game. Larry, who has more at risk to walk away from this? Is it Greece or is it the European Union?
Well, I think both have tremendous risk, but that's because both of them have very different objectives. Ever since he was elected and he did his victory lap back in late January, early February, Tsipras's goal is to transform Europe. He called his election not just a transformation for Greece, but a transformation for all of Europe. Now, if you're Angela Merkel or Mario Draghi, you don't exactly want to be transformed. And they want to have some kind of a Europe by rules. So when you have that kind of very different, conflicting set of objectives, it's very hard to see how you work it out. And I've been kind of skeptical that they're going to get a workout. This latest gambit, I'm not sure how much substance there is to it, but I don't think that leads to anything. All that they're talking about now is, will Greece adhere to rules it has already committed to under the previous government? And then maybe we'll talk some more in October. I don't think that's exactly what Tsipras has in mind, and so I really don't think it's going to be followed through.
Michelle was just with us a moment ago, and she's been talking to people on the streets who are saying at this point they'd like to just be out of it and bring back the drachma. What actually will happen? What's the downside for Greece if they do bring back the drachma? We know the upside is that they can deflate the currency, and that will certainly help things like their exports and their tourism industry. But what's the downside if they go ahead with that plan?
Well, the key step here is repudiation of the debt. So if you can take 180% of GDP in debt and just kind of throw it off your shoulders, you're a lot better off. Now, you have to pay a price for that. You don't have access for credit markets for probably two and a half years. But suddenly the Greek government and the Greek people no longer have this enormous debt burden. Now, once you get rid of the debt, I think it's be very hard to see how they can stay in the euro. The legalistic views in Brussels and Frankfurt, we'll have to figure that one out. But that's the advantage to Greece in going down this route. Now, there's definitely going to be short-term pain. When you get cut off from credit, and they are definitely a country that is in need of financial inflows, things are going to be very painful in Greece. But they're going to be painful for a couple of years.
In Greece.
They're already very painful. They will get more painful. But I think that in Tsipras's mind, if they can work through that pain quickly, if they can devalue, then maybe by the time he's up for election again, things will be looking up. That's their strategy. Now, the flip side of it is the creditor countries are going to be out that money that Greece is going to be repudiating. And, you know, that's not insignificant. It's about 2% of Eurozone GDP. That's going to have to be reflected on the national bank's budgets. You know, the French, the Italians, the Spanish are all going to take their pro rata share of the hit. And, you know, that's why they're not very happy about this either.
Tom, watching this as a U.S. business leader, what does this mean? Are there ramifications that will be felt here?
Oh, absolutely. Look, you know, I always like to use this framework of value as a function of risk and return. And how do we think about the value of the United States economy with this going on in Europe? We always know we have this malaise in Europe right now. You have event risk in Greece and perhaps Russia and a variety of other things. From a risk and return standpoint, what should we expect in terms of economic growth, and what is the risk? What's the added volatility of a potential Greek withdrawal or general volatility in the euro market? So it causes business leaders to be reluctant to commit long-term capital in light of this bigger volatility. We should know that increased risk in financial markets has a real cost to business. And so to the extent we're growing risk in Europe, that actually serves to kind of devalue future economic growth, even here in the U.S. The knock-on effects, the so what of Greece to the United States, to me, is particularly important. And think about what the Fed is doing right now in terms of monetary policy. When do they lift off, and what is the trajectory?
Do you think it pushes a potential rate hike in September further?
Certainly. And in fact, we got in this very interesting kind of conversation in this conference of chairs at the Fed recently. And my metaphor to kind of where the Fed is right now is dividend policy. Mm-hmm. You know, when a company makes a dividend decision, it's not about history, and it's really not even about the current period. It's about what are future expectations. I know everybody's fixated on when's liftoff. Is it going to be September, or December, or even 16? But I think the bigger question is, what is the forward trajectory, and how regular, predictable, and sustainable will Fed actions be? If we can get to a period where we think we can predict with some certainty what the track will be, that will inure to the benefit of long-term capital growth, because that gives businesses something they can rely on.
And we do eventually probably need to get back to 3 or 4, maybe, do you think? And that's 4 times 4, that's 16 raises. I mean,
yeah, so Joe, by when?
We're going to sweat out every single one of those 16
Well,
raises?
but that's the point, exactly. And it's really 3 by when. So you want to say 3 by 17 or 3 by 18?
Larry wanted to get started earlier. It doesn't look like your wish is going to come true, Larry.
No, I don't think so. You know, I think that the chairman is right. I thank him for his service to the Fed. I think they're going to use this as another reason to delay. Mm-hmm. The problem is all the delays haven't solved anything. We still have debt building up. We still have distortions in the capital markets building up. And eventually, the Fed is going to find itself way behind the curve, and that is going to be a very disturbing event for markets and for the economy.
All right, Larry, thank you for joining us. It's great talking to you.
My pleasure.
Tom, of course, will be with us for the rest of the show. I want to tell you about a couple of other stories that are in the headlines this morning. First up, President Obama announcing a proposal that would make nearly 5 million more workers eligible for overtime pay. That change would raise the maximum income that a salaried person can earn and still be eligible to just more than $50,000 a year, from somewhere around $24,000 right now. Paychex CEO Marty Mucci will be joining us in just a little bit. We'll get his thoughts on this topic. Also, New Jersey Governor Chris Christie will formally launch his 2016 presidential bid today. He will be the 14th Republican to officially enter the race for the GOP nomination. And in deal news, insurance broker Willis Group is buying Towers Watson.
What you talking about, Willis?
There you go.
In an all-stock deal. The tie-up has an implied equity value of about $18 billion.
Different strokes. What you talking about,
Can you
Willis?
sing the
Come
song?
on.
No, it was that What was that kid's name?
What you talking about, Rick?
Webster?
Gary.
No.
No, Webster's a different one.
Webster's a totally different show.
Was that Gary Coleman?
Gary
Yes,
Coleman,
Gary
absolutely.
Yeah.
See, this was, I think it was, you guys were kids
Todd
watching.
No,
Bridges,
Gary Coleman, and
Coleman.
very sadly, remember what happened to all those kids?
Yeah.
If you were on
Dana.
Dana. Yeah, Dana. I remember
terrible,
that.
terrible things that happened to all those kids.
That's what shows you. I mean, there's a, you can learn. There's a lesson there. And
Yeah.
coming up, a new strategy for
Starring early
Yeah,
in life.
it started pretty early. When did you join the New York Times? Like 17. It'll get you all messed up if you don't.
Well,
If you rush
that
your
explains
child.
a lot.
That's what I mean.
Explains a lot.
Rush your
That's a
childhood.
fact, though.
That was your only job, too, which is also, we deal with that every day. Anyway, a new strategy for powering America. Solar, lithium-ion batteries, natural gas. We're going to talk about the future of utilities with Tom Fanning in a $50 or $60 crude world. Check out the futures at this hour. We'll be right back. Let's get back to our guest host this morning for his pulse on the future of alternative energy. You have a pulse.
Yes, sir.
Oh, you do? Okay. Tom Fanning, you do. You're a very animated, you're a great guest whenever we have you on. We do have some guests that do not have pulses. Anyway, Tom Fanning, Chairman, President, and CEO of Southern Company. It is different at 55 or 60, but if you're long-term on oil, crude prices,
Yeah,
for
sure.
all the renewable stuff, but you still got to be involved with it. You can't,
absolutely, yeah.
but these are one of the long-term things that you were talking about that
That's why you have to play a portfolio.
Yeah.
Look, if we ever try to get in the business of predicting where any energy prices are coming from, you just, you're lucky if you win half the time.
we just heard that, if you believe Kerry and you believe the guy from Iran, they're getting close. That's 30 million is in barrels. I mean, we're going back down probably, right?
I had a good conversation with John before I got on here. It was really interesting stuff. Yeah, but it's going to be low for how long? One of the things that we were talking about is, I think one of the things we underestimate in America forever in terms of policy is the advance of technology.
Right.
When you think about what's happened with natural gas and the technology revolution that permitted, directional drilling and fracking and the whole bit, and look at what that's done. In my view, there's more potential to unlock more natural resources in America than we've ever seen. That's why, and we've chatted about this in past shows, that's why I've always been in favor of exporting everything we can for the benefit of the broader economy. Southern Company is like the third or fourth largest consumer of natural gas in the United States, and yet we're all for unlimited exports. I think that will lift the boats, and the bigger effect to us will be a growing economy really helps us.
Has anyone ever won a Malthusian bet? I don't think they have.
Yeah, I don't know.
You lose every time over the past 300 or 400 years, unless you thought buggy whip makers were going to.
Well, nobody can predict the future.
Well, talk about this EPA thing. Was that a positive for you? The SCOTUS decision?
It all remains to be seen. The recent remand back to the D.C. Circuit really says that the rule remains in effect until the D.C. Circuit figures out what they're going to do, and then it's unclear what they're going to do. They could send it back to the
Do you
EPA.
understand what the Supreme Court was saying? The Supreme Court was saying you need to
Take cost
look
into
cost.
effect.
That it can't just be, wow, this might be bad, 100 years from now, and it's going to cost $10 billion a year until then. You can't just do it based on.
Joe, here's the point, though. Forget kind of the kind of tactical situation of what the Supreme Court just said. The bigger issue is, and I've said this a million times on here, as a CEO of one of the most important companies in America in our industry, we have to balance clean, safe, reliable, affordable energy for the benefit of the customers we serve. The only other entity in America that has the lens to make that balanced bet is Congress. Because right now, since Congress has kind of, during this last administration, has been rather frozen, right? Mm-hmm. And so we're having policy made by regulators. And that has really, well, think about it. EPA, clean, safe, reliable, affordable, EPA can pretty well handle clean, but they have no way really to assess reliability or even affordability. That's why policy needs to be made in Congress and let the regulators kind of enact the policy that's put into place.
You think that those writers in Hollywood don't know anything. You remember the original Simpson movie. Do you know who the villain turned out to be. They kept saying EPA, 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 and there's a big. It was the.
No, listen.
It was the EPA,
But
and they
Joe,
were early.
Joe, I think EPA is well-intentioned. I really.
Oh,
believe.
geez, that makes it all right then.
No.
How many passed the hell?
Regulator.
How many? How many passed the hell can you
They're
make with good intention?
well-intentioned. They just don't have the ability to assess reliability and affordability. That's why we got to get control in terms of policy back into Congress.
Gee, let's just all act on well-intentioned.
No, but that's what I'm saying. They have to take into account the balance.
When idiots act on, good intentions,
Well,
what.
but I didn't say it was good. I just said that's what they're doing.
Right. Okay.
That's why regulators can't make policy.
Oh, but they are now.
Well, but that's
and they
why
have
we need to
been.
get back in Congress.
Okay. That's what elections are for. We keep hearing. Thank you.
Piece of cake.
Yeah, we'll have much more from Tom throughout the morning. Okay.
Yep. Welcome back to Squawk Box this morning. Let's take a look at some stocks that are on the move. Pentair shares are jumping after activist investor Trian took a more than 7% stake in the valve maker. Dow Jones reporting Trian pushing for Pentair to consolidate the industry by buying its rivals. And Trian's Nelson Peltz will be a guest at CNBC's Delivering Alpha event that will be taking place just a couple of weeks on July 15th. Also, Conagra matched estimates with quarterly profit of 59 cents per share. The food maker share is getting a boost. However, as it announced a new plan to boost profit margins, including divestiture of its private label business. And Fitbit shares are higher in the pre-market trading as RBC Capital Markets begins coverage of the stock with an outperform rating. RBC says Fitbit is rapidly gaining share in a growing business world. There you go.
All right, Bill Gross warning that mutual funds, hedge funds, and ETFs are part of a shadow banking system that is vulnerable when liquidity dries up. He says that those funds are in effect banks that are not required to maintain reserves or even emergency levels of cash. These comments came in Gross's latest investment outlook, which was released by Janus Capital this morning.
And a topic we've been mentioning throughout the show, President Obama announcing sweeping change to overtime pay, extending pay to nearly 5 million Americans. Here to discuss this and give us Paychex's monthly small business report is Marty Mucci, CEO of Paychex, and our own Steve Leisman is also here. Let's start, though, Marty, with the president's proposal, what it means and its implications. Good, bad? What's going to happen here?
Well, it always adds more cost to small businesses. You know, we want to make sure that people are paid right, but when you increase that many into the overtime bucket, it's going to put a lot of pressure on small businesses to reduce overtime hours and drive more productivity from existing workers.
Long term, don't you think that what will happen is just base salaries will get reset?
Yeah, well, I think so. But in the short term, you know, it does put a lot of pressure on small business who see a positive economy right now, but not booming yet. So they're being very careful to add workers. This just puts more pressure on them to keep their expenses down.
Steve, this is a Jared Bernstein proposal, right? I mean,
yeah,
this is something that he pushed.
I'm having a hard time getting behind it because what I think is, when I think it through, and maybe Tom can help me out with this, I've been thinking about it this morning, is this idea that, okay, so I don't want to pay the overtime. I would then bring on another worker, which would engender all of these administrative costs around this other worker that you brought on. And the net result of that is a less productive worker because the guy you want doing the overtime is the guy who is doing or the woman who was doing the job ahead of time. Now you got to bring in this other person. So I'm not sure that the macro of this scales up to being positive for the economy. Plus, I'm totally and largely in favor of getting workers more money. And I don't mind putting pressure on big business to take profit from them. I do mind putting pressure on small and medium-sized business.
Ooh, you want people to get more money. You want people to get more money because they produce more. This is
I want them just to have more money
without any conscience about production. Here's the deal I would have as a CEO of a company, especially little businesses, to say, we want to reduce overhead in business. You don't want to have gunk in the engines of commerce. All we're doing now is increasing overhead. We need to reduce the size and cost of government.
Is this absolutely going to happen, by the way, Marty?
Well, not sure. It looks like it's getting very close to happening. And you know, again, as you guys are saying, it's going to put a lot of pressure on small and mid-sized businesses. And I think they're going to not necessarily add another worker. They're going to try to drive productivity within the 40 hours to keep the overtime costs low.
So, Steve, but that actually would be a better thing. If you think about it like that.
In other words, do it in the 40 hours. But think about a person now.
Anyway.
Think about a person now who works this extra time, right? And then the small business owner has to decide, you know what? Do I pay this person time and a half? Do I send this person home? That person's paycheck is going to be lower as a result of this.
Why are you willing to be confiscatory of the profits of a large company, but not of a smaller, mid-sized company?
I think there's a completely out of whack balance between shareholders and employees at the moment, where there's absolutely no bargaining power on the part of employees, and this has resulted in some of the highest profit levels as a percentage of GDP that we've almost ever seen.
Mr. CEO, what do you say to that?
That's what
happens.
happens.
Big company America.
That's what
right
happens
here.
with 6 years of slow growth.
I kind of think that's kind of a short-term argument. In the long run, I think that
It's been
argument
going on for like 5 years.
But
Yeah,
I think
5
it's,
years while we've been growing.
But I think it's kind of garbage, though. Really, you've got to meet employees absolutely halfway or more in order to drive a long-term business.
Right,
You can't just drive everything to the bottom line of a corporation. Really viable corporations in the long run meet the interests of all of its stakeholders: first, customers, external publics, employees and shareholders. You got to make it all.
My shoulder, I get so tired, but I'm glad you're here. Someone that's actually in the business that can answer. Seriously, I'm exhausted, and I've only been back 2 days trying to answer.
It's a heavy lift.
It is.
But I swear that's true. Get out of the short-term stuff. In the long run, great companies, pay attention to employees in the right way.
And when you're trying to keep good employees, when you're growing at 3 or 4%,
and that's
unemployment, when you're trying to keep them, the marketplace allows for things to all balance out.
Growth and providing opportunity is where you really provide.
I started in the marketplace, and I look at why the market is
you rarely arrive anywhere near the marketplace.
I almost always do, though. That's the thing, Joe.
Right.
Okay.
I look at why the market is not providing workers with the gains from their productivity increases, and that suggests to me a huge lack of balance and bargaining power on the part of employees.
An interesting point.
You can't deny, Tom, that the data show that wage growth has lagged productivity and that capital has accrued almost all of the gains of productivity over the past several years.
It's a false argument. If you look at the top 40% of workers in America, yeah, they're doing pretty well. It's the bottom 60% that haven't done particularly well. But hang on. When you look at just the data, you've got to look at where the jobs are being created. And the problem with one of our economic recovery issues right now, jobs are being created in the service sector, they're being created in part-time sectors, and unemployment looks better because disaffected workers are making the statistic look better.
Marty, you agree? I just want to bring Marty in.
Yeah.
Marty's got the numbers. He's got the data. He knows these numbers. Is that true, Marty? You're listening to this conversation?
You're definitely seeing an increase in part-time workers. That's a very good point. We're up to about 8% of the total workforce. That's up 1.5% from just a year ago and 2.5% from 2 years ago. So part-time is very interesting. Part of that is the Affordable Care Act, I think, is driving employers to be a little bit more careful about hiring full-time workers. But I do think there's I think workers do have a little bit more to say. It's more competitive out there now to get workers into your business. Sure. And I certainly agree with you got to take care of your employees. That's always going to drive long-term growth.
Hey, Marty, before we let you go, I know you have the Small Business Index. Let's just talk about it for a second here. Top states for small biz employment, Washington retaining the top spot, and the top metro for small business employment is now Dallas?
Well, Dallas has been at the top for some time now. Dallas has been a very strong market for employment. Houston's dropped for a few months in a row now from a small business job growth. I think that's the spillover from energy jobs being down a bit.
Right.
But overall, pretty much flat.
Nice to see Detroit is in the second spot.
Before we go, real quick, I just want to remind everybody it's Jobs Thursday this week. Have you guys been talking about this? And
we've been talking about.
Why are you sighing?
We're still on Grease Tuesday here.
What do you mean come up with something?
Got to come up with my gag, my number.
That's the best part of the month, though, isn't it? I mean, it's like your little drawing and stuff.
For me,
we're looking for 233. So I'm just wondering. The reason I bring this up today is focus so much on Greece. By the end of the week, do we start to refocus on the U.S. economy and how it's doing and whether or not the market gets redirected?
If everybody's on, the edge still on Greece, right?
No, I don't know. I think that's right. I think a strong jobs report could put Greece in some context.
Okay.
Put household incomes up. That's what I'd focus on.
They've been rising.
Wealth creation, just recently.
Steve Leisman,
Just
thank
recently.
you, sir. Marty, thank you. Have a great
Okay, thanks.
July 4th.
Up next, is the power grid at risk of a cyber attack? The Deputy Secretary of Energy will join our guest host today, Tom Fanning of Southern Company, to talk about this major security issue. By the way, tomorrow on Squawk Box, the countdown to Thursday's jobs report begins, as Steve just teased. We'll have the ADP report coming up at 8:15 Eastern Time tomorrow, and then we get reaction from Nobel Prize-winning economist Robert Shiller. Squawk Box will be right back.
Welcome back to Squawk Box this morning. A growing number of hack attacks have raised cybersecurity concerns over the past year. But when it comes to protecting our nation's grid, our next guest says government needs to team up with private business to manage the threat. Joining us now is Liz Sherwood-Randall. She's Deputy Secretary of Energy under President Obama. And still with us, our guest host, Tom Fanning, who's the CEO of Southern Company. Liz, thank you for joining us this morning. We're thrilled to have you. Scare the heck out of everybody, or imagine you will. When you guys, think about the worst possible threat or what's really in front of us, what is it so we just understand what could really happen? What's realistic?
Good morning, Aaron. Good morning, Tom. It's great to be with you. You all know, as well as we do, that the threats are dynamic and evolving, and they're very serious. And so we're working closely with Tom and his colleagues in the electricity sector to ensure that we can keep the grid strong and secure against any threat that it may face, whether it's man-made or it's natural, whether it's virtual or whether it's physical. We've got lots of work to do together to ensure that we can keep the power on for the American people.
And Liz, when you talk about trying to create a partnership with business and trying to create a partnership with people like Tom, what does that look like? What in terms of information sharing, what does that look like?
Well, in fact, Liz, this is Fanning.
Yeah.
Go to the broader thing of technology systems and information
Tom.
sharing regimes. Hey, how are you?
I'm great. Good to be with you.
Nice to be with you. Talk about the ESCC work and kind of the broader expanse of kind of what we're doing in information sharing technology and systems.
So we have an extraordinary partnership with your sector, Tom. What we're doing, first of all, is evaluating the threat together through technologies that we've deployed to work with you to ensure that everybody has an understanding of the threats that we face. Then we share data in real time through systems like the CRISP system that we've implemented. Then the Department of Energy does lots of work to do research and deployment of new technologies that we can put out into the field for the use of our utilities and power sector. And finally, we're strengthening our partnership. So as you know, we're doing terrific stuff through the Electricity Sector Coordinating Council that you and I chair, you for industry and I for the leadership of our government. And there we're doing things like exercising together. We've just finished a big hurricane exercise. And in the fall, we're going to do Grid X3, which will be a big test of the resilience of our electricity sector against cyber threats. So the point is we've got to work together because, as you know better than I do, 90% of the infrastructure in the electricity sector is in private hands.
So,
Government
Liz, when
can't
you say
do
you
it
guys
alone.
are going to do an exercise, this is like a hacking exercise. Are you going to hire white hat hackers to effectively hack the grid?
No, it's like a tabletop.
This is like a war game for the electricity sector. And what we're going to do is work together. We have a scenario we develop, and then we have thousands of people across the country who work to test our capability to respond and mitigate a threat. And that's something, as you know, that we do in the defense world, and we're doing it in the electricity sector to ensure that we can deliver power to Americans come what may.
Hey, Liz, and we are so, it's fun to criticize government sometimes. Liz is one of the celebrities in government. She has a distinguished national security background. In fact, she has her own kind of nickname, I found out, working with the Department of Defense. No, she's LSR. That's who she is. Liz, talk about the importance not only of getting the electricity sector right, but the interdependence we have with other so-called lifeline sectors like telecom, transportation, water, and finance.
Thanks, Tom. This is one of the very important innovations that Tom and I have developed together. That is, we need to bring in the other sectors of the economy that will be involved in any crisis that we face. So, for example, the electricity sector is dependent upon the oil and gas sector. We need the communication sector because we know that in a crisis, whether it's a hurricane or an attack on the grid, we're going to need to be able to use communications to communicate information quickly to the American people and restore capabilities. We need other sectors as well. And so what we're doing in these exercises for the first time is bringing in other sectors to ensure that we've coordinated well in advance and we've assessed where the gaps are and we work together to fill them before we face a real crisis.
Right. Hey, Tom, just because you're on the ground, I mean, both of you are on the ground, but you see it every day. You're getting, I assume there are hacking attacks on,
all the time.
Constant.
On
your grid.
Sure. Now, on the grid, yeah. In general, there's a million different kinds of ways people try to interfere.
Right.
So grid is one. There could be a variety
what is
of
it? We haven't had a major grid go down because of cyber attacks just yet that we know about.
Correct.
Do you think that's realistic? Is that a very realistic possibility over the next couple of years?
So, you know,
how connected are we?
The doomsday scenario is always one that we think about, but we work exceedingly hard to avoid. So in the short run, is it possible? Yes. We work like dogs to assure that it's not likely. And I think this notion of linking together technologies, understanding critical infrastructure, understanding the systems that are critical to running that critical infrastructure, and then understanding how we share information. At the federal government level, it's a challenge. Among private industry, it's a challenge. And let's not forget the boots on the ground at the local and state levels.
Right.
And then finally, we got to link in with international. It is an enormous task, but one of the things I'm so glad being able to work with folks like Liz here in the Department of Energy and then across with Homeland Security and a variety of other sectors, that we're now working in real time trying to pull together this interconnection and create a common defense. She said asynchronous threats.
Right.
It always evolves. It's something that we can't create this notion of a Maginot Line. It's not going to be a fixed defense.
Tom, is it a viable possibility that there's a solar event if it were to hit us head on?
Joe, it's exceedingly unlikely. It would only occur most likely in the northern, very northern part of the hemisphere. Kind of the same thing that creates the northern lights is what you're talking about. Right. Exceedingly unlikely in the
those
broad
are
part of the United
scenarios.
States.
So how exceedingly unlikely was it that a tree
Erin,
falling
can I jump in and offer something to reassure?
Yeah, please. We need the reassurance,
yes.
Liz.
Sorry, I just want to offer something for the American people who are watching. So obviously the threats are very serious. One of the things that we have going for us is we're the most dynamic country in the world in terms of generating new technologies to meet challenges. Okay. The reason I'm speaking to you this morning from Albuquerque, you can see New Mexico in the background, is that I'm here to visit one of our 17 national labs. Our Sandia lab here in Albuquerque is doing pioneering work on cyber capabilities to ensure that we've got the cutting-edge capabilities we need to defend against any threat. So the American people should know we're working hard to ensure that whatever comes our way, we're ready to meet it.
Okay. Liz, thank you for joining us this morning and for trying to keep us safe. We appreciate it, and we're going to have a little bit more from Tom in just a little bit. Thanks.
If
Wi-Fi ever went
Great
down
to be
for my
with you.
kids...
Great to be with you.
You don't want Wi-Fi to ever go down for like my kids or something. I mean, you're talking about power,
that would
I guess.
be a disaster.
I mean, if that ever happens, I'm just...
That's a cable operator, my friend.
But, Tom, my point was how exceedingly unlikely was it that a tree could have brought down everything here?
That's not a cyber or physical problem. That is a market structure problem. Now, that's a little bit provocative here in the United States, but there's two kinds of markets in the United States. And I think those markets that deregulated to separate the responsibility for make, move, and sell really work to their disadvantage in terms of reliability. That's where that happened.
Our guest host today, Tom Fanning, is the CEO of Southern Company. And Tom, off camera, we were talking a little bit about the future of the industry,
right.
where things are headed. What do you think?
Oh, it's fascinating stuff. You know, in any element of corporate strategy, you need offense and defense. And I think the inexorable kind of move is that we will have what people call distributed generation coming to fore.
What does that mean?
Traditionally, utilities have had this idea of make, move, and sell. Make were gigantic central station power generation units. Move was transmission distribution lines, and cell really culminates in meters. Now we have smart meters. I think the future is going to be where you have much smaller dispersed pieces of generation, if you will, whether it's a solar panel on your rooftop or a fuel cell in your basement. But I think along with that will be other infrastructure. For example, storage, electric charging kind of equipment. You might have this. We're in a joint venture right now with Nest. They have an adaptive thermostat. One of the things we think Nest may evolve to is a server for the Internet of Things in a home. And when you think about kind of the ubiquity of control chips, anything in your house, asset value, $100 or more, will have one. The server and the Internet of Things will be this next quantum leap in energy efficiency. All of those things are Southern's going to play offense in, and that's where we're trying to invent our future, not kind of be driven by it.
Well, Tom, it is a pleasure having you here today. Thank you so much for joining us.
Thank you. Great being with you guys.
See, then the whole thing can be hacked, though,
I
right?
think
If
you
you got a
should-
server, talking about hacking the grid, this will be like,
You got to play offense here, Andrew. You
Yeah, come
can't
on.
be scared of that
Sorry.
stuff.
He's
Let's
a
go.
he's a good CEO.
He is.
You see, maybe you can disparage some, but see why he makes money?
I'm not disparaging
You guys
anybody.
can continue
worth
this
it.
conversation
It's
on
worth
the set.
it.
You should
Worth
hear the
every penny.
conversations
Much as a
we've
good
been had
pitcher
today.
Every penny.
Thank you. That does it for us today. Make
Thank
sure
you,
you
buddy.
join us
Thanks.
tomorrow. Right now it's time for Squawk on the Street.